Candlesticks are lying to you.
And they're making you lose.
Why am I being emotional here? Like, I'm looking at a chart, a wick and some rectangles.
Lines and rectangles and squares mostly.
Yeah, you're allowing this to make you feel so emotional.
Until you can detach from the color of those candlesticks, you will remain a victim of the market.
You know, the market has you where it wants you. You know, it's got you wrapped around its little finger, basically.
The reason so many traders fail is because, try this. We urge you to try this and we guarantee you will see a change in results from this.
Hey guys, welcome back to the next episode on our psychology series.
Now we want to talk about candlesticks in this particular episode, and something that's quite intriguing and a great way to start this is a bit of a thought exercise. Now think about this for a moment. We all have access to the exact same charts. We all look at the same charts, and most of you, and including ourselves, we look at candlestick charts for our technical analysis. Yet why is it that only a minority of us are profitable from the markets and the majority continuously lose when we all have access to the exact same data? When you look at it that way, you start to realize there are discrepancies and something is visibly going wrong for most people, where essentially a good comparison to make would be if you presented a square to me on a piece of paper and a square to Bernie on a piece of paper. There is a minority of people like Bernie who would be able to perceive that square on a piece of paper and turn that into profit. And then there would be the majority of people on my side who would lose from that simple shape on a piece of paper. And that's exactly what we are all doing on a daily basis with the charts. Mere shapes have the ability to be perceived entirely different, despite the fact we're all looking at the exact same shapes visible on our charts. And there's many psychological reasons behind that. And we want to delve into that further in this video.
Yeah, when you break it down as simple as you said, it's amazing. We are looking at different shapes on a chart. Some are bigger, some are smaller, but they all invoke a different emotion and create different psychology triggers that makes the most retail traders make the wrong decisions. And that's what we're going to talk about today, how these little rectangles are tricking you, manipulating you, and lying to you. Something so simple as the candlesticks. And we're going to explain how they're lying to you and manipulating you, and then also talk about how to combat that so it stops.
And I think the key to really beginning this, before we get into the solution of this at the end of this video, instead let's actually delve into the truth of the market. And first and foremost, it goes about saying markets are rigged, markets are manipulated. And one of the biggest breakthroughs you will make is understanding that those candlesticks are a form of deception. They are not your best friend. They are not giving you free signals, and there'll be a lot more on that coming later as well. The markets are there to simply lead you astray, and the candlesticks are designed to revoke and invoke an emotional reaction. Now let's go back to the very, very basics of when we all first started and go through the likes of making your first ever TradingView account, or opening your first account on MT4 or a crypto exchange, broker, whatever it is. What is the one key characteristic of every candlestick chart you automatically see? The bullish candles are green and the bearish candles are red. Now, I don't think that is a coincidence, because that is emotional manipulation and triggering deep subconscious theoretical trauma from the very offset, and allowing you as a very emotional trader in the beginning. Because let's face it, when we first start trading, it is an emotional experience. And the only way you ever become a successful trader is when you eventually, over many years through wins and losses, discover the ability to combat those emotions. But think about your very first trade, demo or live. It was an emotional experience. There was an absolute thrill of winning that first trade. But simultaneously, there was a deep emotion and even somewhat of a thrill with losing your first trade. And if you think about it, from the very offset, you are immediately in your most emotional, vulnerable state as a newcomer trader, associating those colors subconsciously with a loss or a win. Now, going into that deeper, and I will let you go into this after as well, what do we, let's think about this for a moment. What do we associate, first of all? Why the colors green for an upside move? And why the colors red for a downside move? What do we subconsciously, from a very early age, associate with these colors? Green, hope, greed, euphoria, success, positivity, safety. Red, think about it. You know, even when I say the word red, immediately what comes to mind? something from a horror movie, pain, regret, fear, all kinds of deep negative emotional responses. You know, if you see the color red anywhere, your immediate thought is generally something quite horrendous. And when you associate candlestick colors with these emotional responses within the market, such as a loss and the color red, and a positive form of hopium in the color green, naturally, you then become emotionally dependent on the movements of these candlesticks, which are used and weaponized against you.
Yeah, completely. They are used and weaponized against you. So we're breaking down the complete basics here before we get a bit deeper. So as Tori mentioned at the start, we're all watching different shapes on a chart. But why is it creating emotion? Why are you getting triggered by these simple rectangles or shapes on a chart? As Tori also said, by default, when you open, trading view chart, most brokers, etc., default, your chart is green and red. And why is that? As you said, green is, attributed to safe, good, greed. And then red is obviously like pain, danger. Danger's usually the main one for red. And is used to scare you. So when you are then attach your trading to these colors and why you're trading them, they invoke this subconscious psychology and subconscious emotion out of you, which you're not realizing when you're trading these candles. A big green candle, you just imagine that in your mind now, that the trigger straight away is to think to buy that, or a big red candle is to think to sell it. Or if you're in the wrong, on the wrong side of the market and you see a green candle, and you're short, you get scared because you think, oh shit, the market's turning. Or if you're long and you see a bearish candle, the same thing, you start to get worried. It creates panic. Because if you're in a long trade, next thing you see a red candle, you're like, shit, panic, like danger. So you're getting worried. But all of these emotions are coming from these candlesticks, which just by the color of the candlesticks are creating this massive amount of emotion from you, which a lot of it you're not even realizing is very, very deep rooted. As Tori also said, from a very, very young age, if you think about even before you started trading, let's just think, in the news, or, if you hear stock market crash, immediately you think red. Anything, just in general life, from when you're young, a baby growing up through your years, in society, there's things that you just take on board that are just subconscious. And so when you think of something or color, it brings an emotion. You don't even realize it. That's also very, very true when it comes into trading. So when you're looking at trading and you're looking at these candlesticks, you might not even realize it. Maybe you do. And even if you do, you might not realize how much of an effect it's taking on you. But when you're looking at these candlesticks and the colors of green and red, they're creating this emotional turmoil inside you and making it very emotional for you to trade on a day-to-day basis. Because if you're sitting in front of a chart from 8 o'clock in the morning till 5 o'clock in the evening, and you're watching every single candle, and you're watching, if you're in a long trade and you're watching every candle go green and then red and then green, it's unknown to you, creating this emotional roller coaster inside you and creating this panic and anxiety and stopping you from having a cool, clear, calm head to approach the market, because you're on this emotional roller coaster. And if you find that with your trading, it's all down to psychology. And as we explained, and why we're doing this series, psychology is 80%, strategy is 20%. We're going to highlight these things to explain the importance of something so simple, but how it can have a huge, huge, huge effect on your trading.
Yeah, and if you go back to your very first trades and knowing what you felt in that moment, when you win a trade, you will naturally begin to associate the color green with winning trades. Vice versa with red candles, it will generally be associated with fear. Now, the goal of the markets is to deceive you into doing the opposite of what is actually going to happen, especially when it comes to the case of grabbing liquidity, or in the case of crypto, especially exit liquidity. It is a game of cat and mouse. And when you realize that you are significantly less powerful than you believe within the market, you learn to view those candles entirely differently to how most people view. Now, as we said in the beginning, I said you could look at these candles in one of simple ways. You could look at it as a potential free tip, an indication where the market's going. And this is how a lot of people think. They think that, a big bullish candle has been printed. This means insiders are buying. This means whales are getting in. This means the institutions are accumulating. And you can look at that and be like, well, if they're buying, I must be buying too. What is causing this movement? Is it the larger players, or what could it possibly be? But if you instead start to realize that there are forces far more powerful than you that move, orchestrate, manipulate, and basically move these candles up and down, you will then realize that they essentially have the power to control the movements of these candles, whether that is individually or collectively through various different avenues. And then you start to realize these candles are highly deceptive tools. And then you start to realize why they are formed in particular levels. Now, as another thought exercise here, how many times have you chased a bullish candle only for price to suddenly reverse to the downside? Vice versa, how many times have you sold a massive red bearish candle during very notable levels in the market only for it to absolutely explode and reverse to the upside? Now, the key here is to also understand the time frames these candles emerge on. And there are two particular forms of candles that are the most monstrous for proving this point. And those are generally bullish engulfing and bearish engulfing candles, or Maribozus on the bullish and bearish side. Now, this depends on crypto and Forex, but it's generally the exact same formula. And depending on the time frame, I would say the stronger the bullish closure on a monthly or weekly time frame, specifically in the key all-time high areas or significant levels of resistance, vice versa on the downside, there is a much higher probability a huge reversal is going to take place. But how does that actually work when you think about it logically? How can a candle that we associate with positivity, hope, and an increased valuation of the price asset we're tracking on the upside, of course, in this example, how does that then lead to price going lower? Wouldn't that logically represent that a huge amount of buyers or longs are jumping into the market to increase the price? And then you start to realize that is the exact point of the trap. The goal of these candles is to make you feel, more importantly, hence the topic of the psychology series, which we're trying to help you with, but also believe price is going in a particular way. We are all programmed to look at these same charts. So you have to think not just about what you are thinking in that moment, but most importantly of all, what are those candles making everyone else feel in that moment? Because if you know 95% plus of traders lose, you know they're losing for a particular reason. And that's because they are trusting these candles as gospel. And this worsens with fundamentals on top, which we'll get to in a moment as well. One of the easiest psychological tricks is if you are constantly losing or constantly being deceived and chasing the momentum of a bullish or bearish candle only for price to reverse against you, don't look at it anymore in the same way. Instead, if you're feeling that way, ask yourself, what is everyone else thinking right now? Does this look too good to be true? Does this look too easy of a short or a long? And when you think and feel that way and realize that everyone else will be thinking the same as you, I guarantee you there's a higher probability the market will reverse from that point.
Yeah, and just what you said there again, and I tell this to our members all the time, the most manipulative candle in the market is a bullish engulfing or a bearish engulfing. Now, we'll give examples of that in a minute. And, when I get sniper entries, I love to see these candles in the market because it gets me excited. Because if I see a bullish engulfing candle, I'm looking to short the market. Where, as Tori just said, 95% of retail traders, they're looking to take a long trade. So that's why they're losing and why I'm getting sniper entries and why we're winning and doing the opposite of the 95%. But let's think about those candles for a second. Just imagine that big, strong bullish engulfing candle or a big bearish engulfing candle. And imagine that just breaking, a bullish engulfing candle breaking resistance. Let's go back to the colors we mentioned a minute ago. If that candle is a big green candle, immediately the psychology part of it, you're seeing that, trading is very visual. When you're a technical analyst, trading is very visual. So your brain is perceiving what you're seeing. And you need to make a decision, sometimes very quickly, on what you're seeing. So if you've got a big green candle breaking resistance, instantly, unknown to you, because of the reasons we said at the start, because you've been conditioned since you were a child in the world we live in, that green is good, red is bad. So when you see a green candle break up higher, it's almost impossible to think that about selling that candle or selling into that candle, because you are hardwired throughout your whole life to think that this is going to go higher. This is strong. This is good. This is going up. It's bullish. You know, it's almost insane to short a bullish engulfing candle. But in fact, it's almost insane to long the candle. And that is why 95% of people are losing, or 90% of retail traders are losing. Because as you also mentioned, most traders, retail traders, if you're watching candlesticks to give you a signal, you're never going to be successful, because you're reacting to the market rather than letting the market come to you and then take a trade. You should have your levels, you should have your regions, and then let the market come to you. But if you're looking for a signal and waiting for a bullish engulfing candle to jump into the market, or a bearish engulfing candle, you're setting yourself up for failure, because these candles, and these specific candles out of all of them, are the most manipulative. They're used to completely fool and completely trick you. And again, one of our previous Forex lessons we've done a few weeks ago, I showed you how to use the range tool, and I showed you about the liquidity being taken from the highs and the lows. Go back, if you've back tested that, or if you haven't yet, look at ranges. Just highlight simple ranges, whether it's monthly, weekly, daily, 1 hour time frame. It happens again and again and again. Highlight a range, which is also a resistance and support. Highlight that range. See when price breaks out of that range to the upside. It normally does it with a bullish engulfing candle, which is a big green candle, or if it's to the downside, a big red bearish engulfing candle. And then more often than not, you'll see that price will reverse and come back within the range and go to the other side of the range. But when price on the top side of a range and price has a big bullish engulfing candle and breaks through with an extremely large green candle, no wonder, most people are failing, because you're hardwired to believe that it's a buy trade, when in fact, you should actually be looking to do the opposite of what the market is trying to make you do. As Tori said as well, what you need to be doing when you're thinking about taking a trade is thinking not so much about what you're doing. If 95% of retail traders are losing, think when the market is moving, think, what are they doing now? What would they be thinking? When this big, massive green bullish candle is breaking through resistance, think, what are the other 95% of retail traders doing right now? What are they thinking? And then do the opposite. The same thing on the downside of a range or break of support. You'll often see a big, massive breakthrough, induce sellers into the market. Sellers jump in because it's a big bearish engulfing candle. They can't wait for a pullback, or they think they're going to miss out. Again, why do those emotions come? Let's think of price breaking support and a huge red bearish engulfing candle. We've all been there. The fear of missing out, thinking, shit, I can't wait for a retrace or a retest before jumping in. This is just dumping. It's dumping. I need to jump in to make money. The panic, everything, you start panicking. Everything goes out the window. Your whole strategy goes out the window. Why? Why is that? Break this down, because it's, trading is 80% psychology. So it's about you. It's about looking inwards, not so much looking at the chart. The chart is making you feel something. So when you're getting these feelings in the market, or that fear of missing out, or wanting to jump into a trade, don't, pay too much attention to the actual chart. Look at yourself. Think, why am I feeling like this? Why do I want to short this now when I've just seen a massive bearish candle, and we could be at the bottom of a trend or a bottom of a move, or we just broken support? Why do I want to jump in now? Why do I feel the need to press sell? What is making me feel this? And when you start analyzing that and looking at yourself, you'll realize about the emotions that the market is triggering. When you broke support and you're looking to jump in, well, why were you not prepared to sell when it was at the high? Because when it was at the high, or at the top of a trend, or even on a retracement of a trend, every time it retraces and goes back up to make a high, usually it will do with a bullish engulfing candle or a strong move up. But everyone's scared to sell when it's moving up, but they're happy to sell once it starts dropping and breaks support. That's the worst place to enter. But why are you scared to sell up here? Why are you okay to sell down here? And then why are you more often than not losing? Because you need to do the opposite. When price has a bullish move up or a bullish engulfing candle, you need to look at shorting and not be scared, not have fear. You need to rewire your brain and rewire your psychology and do the opposite of the 95%. When price starts selling through the floor and dying, and you feel that we've all been there, you feel that you need to jump in because you're going to miss out on this move and and miss out on quick money, which is another thing we'll talk about. Looking for that quick money, that quick fix, that's only going to lead you to, losing. But when you can't stop yourself, or you feel like you have to jump into the market, again, look at yourself. Just stop. Take a step back. Think, why am I having these feelings? Why am I getting these emotions? Did I mean? Like, why is the market making me feel like this? Because remember, it's rectangles on a chart. So how can a chart make you feel so emotional? You have to look at yourself and say, what is going on that I'm sitting at a desk with a chart in front of me and it's making me feel like this? It's making me have so much emotion. If you're feeling like that, there's a problem with your trading and you won't be successful. You have to remove the emotion away. And we're going to talk about that in a minute and how to do that to combat all of this. But the main reason for it is most people are dealing with green and red candles, which is, making the whole situation worse and heightening the problem, because when you're seeing a green candle or a red candle, it's evoking that emotion in you even more. And, I didn't mean to think about saying that, but when you really do think about it, how can you be sitting at a chart and getting emotional? So you have to look inwards and say, why am I being emotional here? Like, I'm looking at a chart, a wick and some rectangles, a few different shapes on
Lines and rectangles and squares mostly.
yeah. But you're allowing this to make you feel so emotional. So you have to realize that it's not the market, it's you that's the problem. So fix the psychology, and we're going to talk about this more and then about how to combat it. But fix that, and then once you rewire your brain, what you're viewing won't be making you emotional. You'll actually get excited on the flip side. So for example, when I take sniper entries, I look for a bullish engulfing candle. I get excited when I see a bullish engulfing candle. If I see price going up to my area and it's a bit slow, I'm like, yeah, okay, this could be a sniper entry. But if I see price come up into my area with a big bullish engulfing candle, I get excited. I'm more confident that there's going to be a sell-off, and I'm more confident with my trade playing out when I see price driving up strong and a bullish engulfing candle into my level. Because for sniper trades, obviously I'm getting in the top and bottoms. So price drives up into my level. If I see it driving up fast and hard and a bullish engulfing, I actually have more confidence that my trade's going to play out, where 95% of people will be doing the opposite and trying to buy. And why is that? It's because I've rewired my brain to understand to not fall for the tricks of the market, the manipulative candles of the bullish and bearish engulfing, that they are manipulating you, they are tricking you, and they're lying to you. And you have to look inwards, rewire your brain. It takes some time, but then change the way that you are viewing the market and why you're having these emotions. Once you change your mindset and your psychology, then you can sit there in front of the chart and not have this emotion. Look at it, and then you see the candles playing out, and you're not having this emotional turmoil every single day at the chart, aging 10 years in 6 months, stressing out that you're losing and you can't get anything right, because the market has you where it wants you. It's got you wrapped around its little finger, basically. The market knows what it's doing. It's manipulating you, and you're stuck in that circle of death because you don't know how to pull yourself out of it. Rewire your brain, have the right psychology, and look at the market as it should be.
Yeah, changing your perception of the candle is key. And when you learn to almost look at the market from a bird's eye view, and instead of being engrossed in that chart, so to speak, and watching that candle go up and thinking, oh my God, this is an opportunity, instead, I guarantee you, if you think, what is this candle trying to make me think and feel? It will change your entire perspective on what's going on when you know the majority of traders are following that candle and it's leading to them losing. Now, this raises a deeper question, and I'll use cryptocurrency as another example of this, because those candles and their colors are not often the only things that come together. They're often paired with additional things such as fundamentals. And in the case of cryptocurrencies, where a lot of traders that are involved in crypto, a lot of them have no previous experience in other markets. A lot of them have jumped headfirst into crypto through the bull runs with no real experience and are left holding a lot of drawdown and very bad prices. This immediately makes them, when the entirety of their capital is invested within the market, they are highly emotional to every single swing up and down. Now, there is a one notable thing that takes place here. Let's use every historical crypto bear market bottom, and we have bought those bottoms for one simple reason. They are often paired with not just a bearish engulfing candle of sheer aggression on a weekly or monthly time frame, but they're also paired with negative fundamentals. Now, put it in perspective, when you already have a majority of traders incredibly emotional to the fact a candle is slamming to the downside, and you look around you and there is a whole bunch of negative news out there reinforcing the narrative that this will never recover again, or this is going to get worse, you will not feel comfortable executing a buy in such an area, because you are not only subconsciously fearing the color red in that candle anyway, but you then have the additional aspect of consuming information reinforcing that fear for you. And we're going to break this down a bit further in a second, but the same applies to the upside. And you can use the most recent YouTube videos on crypto I've done for you guys to put this in perspective. And before we even hit the $112,000, $115,000 zone on BTC I gave you, the video was called "They Want You to Think It's Going Higher." Why did I call the video that?
Yeah.
And why did I give you that zone above the BTC all-time high as a possible turning point? That's because one simple thing happened there. BTC did not just slowly creep up to that zone. It done one of two things. It took out an all-time high, which most traders immediately associate with the idea it's going higher. It met that level with extreme aggression in a bullish nature. That further confirms it is a higher probability of being a trap. It's deceiving traders. We then crashed down. From what happened on the way up, another bullish engulfing candle came through just short of the new all-time high. Now think about that for a moment. What would most people have been thinking in that region? I not only covered this in the YouTube video, but I covered it on my personal Instagram as well, the moment that daily candle closed. For most traders, they are thinking insiders are driving this up. It's about to blow through the high. And that little window of falling short of all-time highs psychologically programs people to believe they're going to get an entry before it blows through the all-time high. What happened from there? We fell back to the 103K region I told you in that previous video. Now we're going to delve into this further, because you will notice a lot of things happen at these regions. The first thing to assess is, if you look on the monthly or weekly time frame for these movements we're covering, and the same is applicable on stocks and crypto as well. Bernie will probably cover more on that. Look at every Bitcoin all-time high or all-time low. What often happens is price wicks through on a monthly time frame. You see one big wick liquidate the high and close back down. But what's happening within the creation of that wick on a monthly or weekly time frame? And the lower down the food chain you go of the time frames, you will then start to notice that on the daily or weekly time frames, often in the beginning of the week or the very early phases of the month, price drives up aggressively through the all-time high or below the all-time lows or key levels of higher time frame support. But by the end of the week or month, price then does the exact opposite in the opposing direction, which ends up creating a huge wick on a monthly time frame or weekly time frame. But also, think about this for a moment. What normally happens at the top of most crypto cycles, or just notable local highs before a big reversal? Banks start giving you predictions. So not only do you have a whole bunch of reasons to buy because of the bullish candles and the emotions associated with that, but suddenly JP Morgan will start predicting a $500,000 Bitcoin. Michael Saylor will start buying more. And again, the strategy behind strategy is a question in itself. But when someone, also with Michael Saylor, think about this logically, when your business is based on the prospects of Bitcoin going up forever, these people have an agenda to obviously push as much in as possible in terms of human sentiment. Now, why is it? Think about this for a moment. All of the people and banks and Bloomberg and anyone else, why is it they only give these predictions at the top? Have you noticed these people are only vocal for bullish predictions when candles are bullish and paired with that? Where have you ever in your life seen an optimistic post or message passed to the media or Bloomberg interview from a bank, institution, or hedge fund manager when the bottom is in? Look at the FTX crash. That was a FUD-driven event, yet price never went down from that moment. Where were those institutions, banks, and funds at that moment in time? They were silent. And it's only once prices recovered that they start to become vocally bullish. And that is often a clear indication for most people, or for anyone that's in the know and aware that markets are manipulated, that the opposite is probably about to happen and they are generating exit liquidity. Now let's take this a step further. Bernie mentioned something earlier about this being an uncomfortable thing to do. It's something that's unnatural, and that is the problem here. People believe that if they, you might need a degree to trade, or you need some form of expertise within the market. But the truth is, you just need the capability to understand yourself. You need to understand how you are reacting to the markets, because they are intended to make you feel a certain way. The reason so many traders fail is because it's uncomfortable to sell at the top of a bullish candle. It defies all logic and rationale. And that's the problem. Markets are irrational, and most of you are losing because you're trying to bring rationality into a market that logically does not make sense. But as you start to understand this, you then realize actually it's incredibly rational for a bullish candle to then cause the biggest of bearish reversals. And it's completely rational for a massive bearish engulfing candle to create the biggest bullish reversal. That is rational. And the reason being is because the market has one simple goal: deceive you into believing that this candle means we're going higher and this candle means we're going lower. And there's a very notable moment that I think Bernie would probably like to enjoy sharing that we executed with real-time examples of this.
Yeah, I think it was 2 to 3 years ago. A very important time in the market, but I just want to carry on a little bit from before I tell that story about what you're explaining about fundamentals on the Forex side, because it is very, very important. Now, we're explaining about the candlesticks and, how much emotion that they're bringing into you in the market, especially being green, red. Now, like the market's extra little icing on the cake, or its last little trick to make this even worse, is the fundamentals. In Forex, we have the macro data on a day-to-day basis. And then there's what we're going to speak to in a minute, the bigger news when something large on a larger scale happens. So again, go back and look and back test what I'm about to say. Have a look on a monthly, weekly, daily, 4-hour, 1-hour time frame. Highlight most of the highs and lows. Not all of them, because it's never going to be 100%, but the majority. And if you can see the majority and have majority on your side in trading, you're going to be successful. Highlight the majority of the highs and lows and see that usually if there's a high made and it reverses, there's usually a bullish candle running into that. So if a bullish candle means strength, why is price reversing? Why are most of the highs got a bullish candle running into it? Same thing to the downside. Most of the reversal from the downside, or the bottoms of the market, if you highlight them, you'll see most of them have a bearish candle into them. Why is that? If a bearish candle means sell, why is it that when there's a huge big bearish candle, price reverses? Now, I said about the different time frames, so you can see that this is on a macro time. So, on a day-to-day day trading or swing trading, you can also see this, and you can take trades using this information. I take trades of it, and our sniper entries is using this. I, again, use the fundamentals. I'm not really into fundamentals, but I know what time they're coming out during the day. Obviously, you have to be aware, but I get my levels from a technical standpoint. But for example, a recent GBP USD trade, I had my sniper levels set. But in the morning, there was some news, GBP news, or the London session open where there's volatility. And when price was driving up, I had my levels already set. I knew where I was going to sell. It didn't matter what the candle was. I knew I was going to sell from these sniper levels because I've done my analysis. But when price started pushing up in the London session fast, and I saw the bullish engulfing candle, I was like, yep, this is a winning trade. Because I know that when the market is pushing up fast, I have more confidence that it's going to reverse. And then I think it stops just below my level, a recent trade, and does this a lot. It stopped just below my level with a big bullish 4-hour candle. So then I knew that price was going to go up, take out that 4-hour candle just ever so slightly, and then come crashing down. And we made 8% on that move. This is what is happening. So that bullish engulfing candle is bringing in the retail trader to buy. But what also, that I said, the icing on the cake for the market, or its last little trick, is to pair these bullish engulfing and bearish engulfing candles with fundamentals. When it does that, retail traders have no chance, because when price moves fast, okay, there's bullish and bearish candles in the market. they can close slowly. Price can push up slowly and it closes as a bullish engulfing, say with a bearish engulfing. But as you will know, if you've been trading, especially if you've been a few months into trading at least, if you see a candle move on the back of news, it again defies all logic and all human nature to do the opposite of what you're seeing. When the news comes out and you see a green candle just go boom, 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 and it's moving so fast, again, you'd almost have to think that you'd be insane to want to short that. But when you rewire your brain, you actually realize that that's the best place to take the sell. So when the fundamentals make these candles turn bullish and bearish, then, as I said, it's a recipe for disaster for the retail trader. Now, zooming out on a higher time frame, we're going to the story Tori just spoke about. When you have crypto in the investments at the short and the highs, or investing at the lows, again, it's at market crashes and calling the tops. With Forex, you don't get things like this too often. But a couple of years ago, I woke up one morning, Liz Truss, there was news about Liz Truss, something that happened. I won't go into it too much. But GBP against the US dollar broke all-time lows. So this was very early in the morning in the UK. It was like 6 o'clock. So I saw this and it just snapped the lows. It dropped. I can't remember how much it dropped, but it dropped down to like 103. I just immediately called Tori. I think I gave her like 10 missed calls. I think we've dropped this on our IG page.
Whilst the world broke into chaos and fear, I woke up to endless missed calls from Bernie in the early morning hours. I finally called back terrified, only for him to simply say, buy £250,000 immediately, and hung up the phone.
So price dropped through all-time lows, and then this was paired with the fundamentals about the UK government, etc. And when there's fundamentals paired with bad news or good news, that is usually where trends start. It can happen on a macro basis as well, like FOMC, NFP, or CPI. Often you'll see trends start and finish around those times because price will use the fundamentals to push price up that last little bit before it comes slamming down. That's on a macro basis. But then as you zoom out, I'm viewing the markets on all different time frames, but then pound dropped through the floor, all-time lows. The news was out, Liz Truss, the UK government, pound's never been this low before, etc., etc. What did I do? Call Tori, 10 missed calls. I was like, wake up, wake up. I was like, we've got money on different accounts. I was like, we need to transfer a 250,000 or 500,000 pounds worth of pounds into US dollars at that price on GBP USD because it crashed through the floor. Huge red candles, lows never ever seen before. We got in our buy order at the lowest possible price. But just think about, why were we doing that? Because I knew that everybody else was going to be doing the opposite of what I was about to do. Mm-hmm. Most people were seeing huge red candles, all-time lows broken, pound's not going to recover, etc., etc. All the bad news that came out, the fundamental news. I remember watching the news and just seeing all the bad news about it. And when you understand how to see the market properly, I'm like, okay, big red candle, bad news, that means buy.
Yeah.
It is literally can be that simple.
Yeah.
Rather than looking at the market, having the fear mongering from the news, thinking, oh shit, pound is dropped through the floor, especially when I was in the UK at the time, the pound is weaker. All the problems going on with the government at the time, and being scared and fearful to even want to trade, and just looking at the chart thinking, oh my God, look how much it's crashed. And most people will probably even try and jump into a short trade to try and catch a little bit of that. Yeah. Instead, as we have rewired our brains and our psychology to the market and the way we view the market, and again, in a minute, I'm going to show you how to combat this, but our charts don't give us this emotion. I'm looking at this floor being broken. I'm like, this is a great place to buy and make a hell of a lot of money. So when it broke the all-time lows, I know that no matter how much you try to invoke fear out of me, you're not going to get it because I've rewired my psychology and my brain. When price takes out a floor or takes an all-time low out, I'm looking to buy and make a hell of a lot of money, because where do you think their banks and hedge funds, etc., are buying? Do you think they're buying up high or they're buying down low? But the fear is what makes everybody else scared and fearful to buy. But you have to buy when there's fear in the market, and you have to sell when there's greed in the market. So buying fear is buying a red candle. Warren Buffett says this. He's famous for saying it. You know, you have to buy when others are fearful and you have to sell when others are greedy. So think about that saying. What he's saying is what we're saying.
It is actually concrete textbook.
He's literally saying, buy when others are fearful. That means buy when you see a red candle.
Yep.
Sell when others are greedy. That means sell when you see a green candle.
Yeah.
And especially,
That is true.
especially at highs and lows. Especially like in crypto, you know, we're looking at the very highs and very lows when you're investing. In Forex, you have the day-to-day. As I said, you compare the day-to-day candles with the macro news that comes out to invoke that emotion. But then on a bigger time frame, you know, for example, the US dollar. One of our first videos back, our introduction video, I spoke about the US dollar. I called the top on the US dollar in December to our members. I said, in January, things are going to get very interesting because we're going to see a reversal in the US dollar. Go to the monthly chart, use the range tool that I showed in a recent video on how to use it. Highlight the range on a monthly time frame on the dollar index. Price broke to the upside of that dollar index on the range with a massive monthly bullish engulfing candle. Then I was looking for sells for the month after. In December, I think it was, or January, it had a doji candle as it accumulated orders, but we knew we were selling and we sold the US dollar and it then came crashing down. But if price made a bullish engulfing break to the upside of a range, surely that means buy, right? Especially on a monthly time frame. Higher time frames are stronger. So why the hell did it all of a sudden crash all the way back down? And again, you know, we're not talking about macro now with the day trading on the 1 hour, 4 hour daily. We're talking about monthly. So let's exactly what Tori said and what we're saying, how when the market pairs the bullish engulfing candle or a bearish engulfing candle with fundamentals, you know, no wonder the retail traders never win. Because in January, what was happening in January? There was the euphoria about Trump coming into office. His inauguration in January, the market pumped up from November into December with, you know, on the back of Trump coming in. Then in January, when everyone I could see was saying that the dollar was going to go up higher, it was going to go higher, it never reached the most recent high. It only actually made a retracement from a previous monthly high. Everyone was calling for it to move to the upside. I stood on our technicals and our beliefs and said that the US dollar is going to sell off. And I was able to say in December that this is going to reverse. Again, how? How could I predict that? Well, technically, price had a bullish engulfing candle. Fundamentally, even though I don't use it too much, but this is big news, fundamentally, we had the euphoria of Trump. So it was, for us, it was obvious it was going to reverse because you got the euphoria of Trump coming in. Once he's in, you know, buy the rumor, sell the news. But price broke out of monthly highs on the dollar index, painted a full-on bullish engulfing candle. Going back and have a look at the chart, I think that would have been in November. And then look how it tumbled. Are you telling me that you think it's a coincidence that price breaks resistance, breaks a monthly range of a 2-year range, just before it has its biggest sell-off that we've seen in years? It's not a coincidence. And if you're viewing that chart with a green and red candle, that monthly candle is telling you to not do anything except buy, because you just had a monthly bullish engulfing candle. So your brain is wired to buy it. You think buy the US dollar, buy the US dollar against all the other pairs. But then what happens? A few weeks later, bang, it drops. And that's the fundamentals mixed with the bullish and bearish engulfing candles. But that shows you an example on the dollar. But again, going to GBP USD a couple of years ago, bad news, price breaking through the floor, big red candles. What do we do? The opposite. And then rode that move all the way up. And this is real Forex trading, not just leverage, but actually converting funds from one currency to another. So we bought GBP USD at the lows and then scaled out as it pushed up.
And the funny part is I didn't even check anything when I finally woke up and got the missed calls. I was just like, shit, on the mobile portal, done. And only after did I check the news. And it was like pound breaks record lows, like big capital letters. How much lower will this go? Will this keep going? And you just realize what they are doing to you. You realize what they are trying to make you think and feel. And the same is applicable to the Trump situation with crypto as it was with Forex. As we were pushing up, leading up to inauguration, what was everyone around you saying? The strongest fundamentals ever. Everyone screaming, Trump is here, the Trump pump, the Trump effect. So you're looking at all of this, and when almost every single source around you is telling you this information, you think, how could everyone collectively be wrong? They must be correct. And I guarantee you, most people are not even economists to look into those so-called allegations. So why is it that after all of these strong fundamentals, the market absolutely tanked? Why is it, after what then consequentially became the tariff situation, did the market recover? Think about it. The truth is, when you hear more voices regurgitating the same tone, these are not expert opinions. These are people all reacting to the exact things we are telling you about right now. And that's because the truth is the majority are doing that. So instead of looking at the majority of heard opinions around you when these things are happening, especially when it comes from the media, you should know to not trust the media and the banks. You should know that from the offset. So when you realize, and Bernie always says this to me, but he's like, when do you ever put on the news and it's helped you? Not just mentally, emotionally, but for trading. When have you ever flicked on Bloomberg and watched something from Jim Cramer or whoever and just been like, actually, yeah, this is a great time to buy? It's never happened, and it never bloody will. That's the reality of trading. But there is a solution to this. And the solution is to remove the color of your candlesticks. You may think, oh, what's going on here? But think about this logically. What is price doing across all markets and all instruments and all assets? Simply bouncing from one price to another. Whether it's a zone, whether it's an exact price, price is literally just moving from one point to the other. And the color of those candles can completely deceive you away from the fact that price is going to bounce from one of those particular levels. And that's exactly where the deception of the color candles come from. Me and Bernie do not use color candlesticks, and I have not used colored candlesticks for many, many years now. It's something we've got every single one of our members doing, and it has revolutionized how they trade, because the key behind what we teach, and whether it's on YouTube or in our app, it's psychology. That is the core fundamental principle of everything we teach. And removing that emotional element from the candlesticks, something so simple, will absolutely change how profitable you become rather quickly, actually. It's not going to be an overnight process. It will take a while to adjust and adapt. But once you remove those colors, you suddenly start to realize things you wouldn't have seen before. Because when you extract the emotional element out of trading, you see it for what it is. And let's just say now, Bernie mentioned this earlier, the speed of the candle, not just the color of the candle, but especially during highly fundamental events. This is why I premeditate levels for you guys. And in fact, if you look at the last YouTube video, we just had the Israel v Iran news. Missiles were launched as I done that video. And what I said in that video instead is, I think we're going to get a bounce. And that probably shocked a lot of you, because a war's erupting. What the hell was he saying? He was saying we're going lower. We did go lower, and the war contributed to it. And because of that war bottom with the FUD and a bearish candle, we start looking to the upside. And from the moment we done that video, the market recovered to 108,000 from 103,000. The same is applicable, and you can see this from our videos. We don't use colored candlesticks. But the key here is to understand that once those candlestick colors are removed, premeditating levels is an efficient way to already prepare yourself for high fundamental events. When you can understand the scope of where the market can go, you will often find over time that the fundamental events drive prices to those regions.
Yeah.
But the speed, size, the rumors, the whispers, the echo chambers of narratives will distract you from the facts that price is still likely going to reverse from that level. And if anything, the speed of it getting there, the quicker, the faster, the more aggressive, the more bullish or bearish, the higher the probability of a reversal. But when the color sticks are gone, you can see that significantly clearer. And in a moment where everyone's going crazy, you're no longer subconsciously programmed to view that as a massive bullish candle or a massive bearish candle.
Yeah. So with removing the colors from your candlesticks, it removes emotion. You know, a lot of the emotion, maybe not 100% of the emotion, but a large proportion of the emotion is gone, and you'll immediately see a change in your trading. When members join us and they see our charts, and you've seen our charts on our YouTube channel, you can see that they are neutral colors. And we get loads and loads of messages from members actually message us after a week or so saying, I feel so much calmer trading now. I feel so much at ease, not just because we're giving the analysis, but because with their own trading, they're just feeling so much cool, calm, and collective when they're trading the market. They're not having that emotional roller coaster that I spoke about earlier, where you're watching every green candle, red candle, green candle, red candle, and you're up and down, and your emotions are going up and down, and you're having anxiety, you're getting stressed, you're panicking. How can you think or trade straight if you've got these emotions going on inside you? You cannot make a proper right decision, especially at the time when it needs to be made, when the candles are then usually a bullish or bearish engulfing candle, sometimes paired with fundamentals to make it happen quick, to just put you in a full-on state of panic, so you can't think straight and your whole strategy goes out the window. You're emotionally triggered. Bang, you've entered a trade on the back of emotion, and the next thing you're losing. But our members tell us after a couple of weeks of how cool and calm and how much easier trading now becomes, because simply removing the colors from the candlesticks and removing that emotion.
Yeah, if you think about it for a moment, let's just say with the BTC current events, let's say my thoughts, which I've made very public, I believe we could get back to 80K. The best way to know if that's going to be the bottom, and why I've even embedded that level into your minds from the offset, is because if we get there, you already know the likelihood is for price to reach that level is going to take something quite sinister to unfold. Now, if you're looking at a particular level ahead of time, instead of ignoring it or denying it and saying that's impossible, we'll never get there, you will often find that price will reach those levels due to some very severe or seemingly severe fundamentals. Look back at every single moment on the chart where some of those largest bullish or bearish candles have been printed due to fundamental events. How quick have they disappeared and changed and reversed in the opposing direction? We have never really seen a situation where even the possibilities of war have stopped prices from fluctuating or continuing an overall trend or even creating a new trend. The fact of the matter is, in that moment, when you are consumed by the color of the candlestick and you are consumed by the fundamentals that surround it, you will become a victim to the markets. And that's really the key of this whole lesson. Until you remove the emotional attachment and until you can detach from the color of those candlesticks, you will remain a victim of the market. That is the goal of the market. It is to deceive you, manipulate you, and lead you astray. It's essentially a game of cat and mouse, herding sheep in one direction. The more people they can collectively get there, aka liquidity, the higher the probability that once that is swept, we are going to see reversals in the opposing direction. It's as simple as that. The majority of people lose, and the majority of people lose because they are emotionally attached to the movements, colors, and size of those candles. But more often than not, the largest of moves are the greatest catalyst for the best entries and the best turning points in the market.
Yeah, and you just touched on it, but I say this a lot. It's leading the sheep to slaughter. Retail traders, 90% of retail traders fail, and these candlesticks are what's leading the sheep to slaughter. They're bringing in the retail traders just for them to get killed, and that's the plain and simple of it. We've spoken back quite a bit in this video, and the core of what we're talking about is the candlesticks, and it might be a lot to take on here. Spoke about fundamentals as well, but if you're very new to this and it's the first time you're hearing about like not having colored candlesticks, and even just seeing about the psychology of the market, and hearing about bullish and bearish engulfing candles being very manipulative, this is your first time hearing this, then it might be a lot to take on. But the very basics and core of this that you need to take away from this to begin with is remove the color of the candlesticks and remove the emotion. Then start looking at everything else we've said. The fact that a bullish engulfing or bearish engulfing candle is usually where you see a reversal. Then start seeing that, when it happens faster is usually where you see a bigger reversal. And then start realizing that when the fundamentals are then placed on top of that, then you even see big reversals again. In the Forex market, as I said, there's day-to-day news, so you can see it on a smaller basis to help you with your trading. So just think bullish, bearish engulfing candles around London, US Open, and paired with news. You often see the market use these bullish or bearish engulfing candles and the news to create highs and lows. That's going to help you straight away. Then obviously on the bigger scale, you've got the world news that can always and very often comes out at the start or a bottom, the top or a bottom of a trend. So often the macro news with the candle, bullish or bearish engulfing candles, create the highs and lows. But if you zoom right out and look at, where trends start and finish, there's usually some very good or bad news in those areas to squeeze out the lows, to scare anyone from buying, and then it reverses and vice versa at the top. So that's where the trends start, and it can also happen on the lower time frame and the macro time frames, where trends often start and finish with some news coming out, like I said, non-farm payroll, FOMC. But that's as you start to understand that the candlesticks create this emotion, and then you can start adding the other parts that we've said. But if you immediately remove the colors from your candlesticks, remove that emotion, I can almost guarantee that give it a week or two, you're going to feel so much lighter, so much more confident in your trading.
100%.
You just feel better. You sit down. I think some retail traders actually fear sitting in front of the charts because, if you're from days and weeks of losing in front of the charts, people start fearing the markets. And if you've already been on a losing streak, or, retail traders, it can take a year, 2 years to become profitable. But if you're sitting down at the chart each day where you've already been losing, and then you're watching these big red candles or green candles evoking this emotion, I don't think you'll ever get out of that circle of death. It's very, very hard. But you remove the emotion by just removing the colors of the candlesticks, then you're more than halfway there to rewiring your psychology. Get these colors that evoke emotion and psychology from you, or these triggers from you, get them out of the way, start seeing the chart a lot more clearer, you'll be a lot more calmer, and you'll be able to make a lot more better decisions and place in much better trades.
Absolutely. And what I would say to wrap this topic up, because we don't want to overwhelm you guys. And in fact, this is going to spawn so many other topics that will come from this as well. First of all, try this. We urge you to try this, and we guarantee you will see a change in results from this. Because once those candle colors are removed, you will quickly realize that bullish is actually bearish and bearish is actually bullish. I want you guys to try this, and please leave us a comment and your feedback on how you found this and how you even find the charts the moment you remove those colors. From your immediate analysis, I want you to strip your charts clean, remove everything, or even create a separate tab on TradingView or wherever you analyze, and do the exact same thing from scratch with no colors. And I guarantee you will see something entirely different.
Yeah, you'll be amazed. You'll be amazed. And please do leave a comment, because I can almost guarantee that you'll find it so much better. Like instantly, especially if you've been stuck with a chart for so long, your brain sort of trains to see something with those colors. When you remove the colors and have a cleaner chart, you'll be like, oh my God, I'm seeing things so much clearer now. How was I not seeing this before? It's all become obvious. You sort of have that eureka moment where you're looking at the chart thinking, I'm seeing things so much clearer now. And I think, please leave a comment, because I do believe hand on heart that it's going to help your trading, and you're going to see really good results from it. And everything we're saying in this video, you're going to see.
So we hope you've enjoyed another episode of our psychology series. And if you enjoyed this one, you're going to really like the ones that are coming up after this. Thank you as always, guys. Make sure to like, subscribe, leave a comment, and let us know your thoughts for the next one.
Thank you, guys. See you on the next episode.
See ya.